The government sold the last of its stake in Citigroup last night. The sales brought in more than $10 billion, and according to our calculations, taxpayers made about $7 billion on the $45 billion bailout. Joining us now by phone is Bloomberg best analyst Jeffery Harte. He is at Sandler O'Neill. Jeff is one of the most accurate analysts on Citigroup, and he does have a buy rating on the stock. Jeff, thanks so much for joining us this morning. Is Citigroup exiting the 2008 bailout measures? What does this mean to investors? What does it mean to the stock? I mean, it's already up 35% so far this year.
Yeah, I mean, it's been a good performer this year, but I think the government selling its stake is additional good news, which should help to fuel bigger gains. I think the big key to Citigroup shares going up from here is increasing the institutional ownership. I mean, it's, sitting about 47, 48% of shares right now. That compares to 74, 75% for most of its large cap bank peers. Getting that number up is really the key, and I think the U.S. government stake was one of the biggest hurdles kind of preventing some larger institutional buying. So the stock's been a good performer, but I think it's going to continue to be a good performer into 2011.
How much more could it go up, Jeff?
That's always a tough one to say, but I mean, just going up to, $550, which is our target price, would kind of put it in line with its year-out tangible book value. So I think there's a lot of potential, and really, that's saying that Citigroup should trade for something close to its forward tangible book value. If there's value in the franchise, it could be even more than that. So exactly how high it goes up, tough to say, but I think there's a lot of room for it to go up from here.
Well, Jeff, I want to try and pin you down a bit on that, because I know there's a great deal that goes into setting a target price for Citigroup, especially with the government having had a stake. How much of that $550 target price was predicated on the government getting out?
Well, I mean, it's an important step toward getting there. As I said, getting the institutional ownership up even close to where the peers are is, I think, the key to that's where the incremental buyer comes to boost Citigroup's share price. And this removes one of those hurdles. So it's not necessarily happening today.
Were institutional investors telling you that they were leery of Citigroup because the government was hanging around in the background, even though everybody from the Treasury Department down to Vikram Pandit said that there was absolutely, no ordering Citigroup around when it came to government ownership?
Yeah, I mean, the large government stake is certainly something that I often heard cited from institutional investors as to something that was keeping them out of or cautious on the shares. And, if the crisis showed us anything, you never quite know what's going to come next. If we did stumble into another crisis, it's hard to say that it would or would not have had a governmental kind of impact on Citigroup. But I think that's certainly one of the concerns that's been keeping institutional ownership under wraps.
Jeff, thanks as always. Thanks to Bloomberg best Jeff Harte. He was joining us there on the phone. Jeff is with Sandler O'Neill.